We're back. We're back again with the Kyle Brown podcast, and I'm super excited to have another special guest with me today. I have Miss Joy Bailey with us, also known as the Mortgage Boss. And I'm super excited to be able to have her on the show today because I have been inspired by the work that she's been doing, all on social media, all in real life, because in real life is all that counts. And she has a phrase that I've been really in love with called edutainment. And that's education and entertainment all in one. And I really wanted to sit down and talk to her about being a loan officer, being able to balance and manage so many other different things that she got on her plate, but most importantly, like I said, on the ground, giving people that really great experience as a loan officer. I've had a number of people refer me to you to just talk about the loan buying process, the loan process, and how to get involved in that process. So I was like, she's only right. If I'm going to bring any loan officer on the show, it has to be you. You an Aggie and I'm a Ram, but we're going to cut that apart today because we're going to be friends. I think when I first met, you was like, yeah, just want to let you know I'm an Aggie.
I'm a loud Aggie.
I'm a loud Aggie. I'm a loud Ram. I'm a loud Ram. But thank you for being on the show today. I would love if you could just give us a brief introduction of who you are, the things you got going on, and we'll jump right in.
Absolutely. Well, thank you so much. I appreciate you extending an invitation to me to speak with you and your audience. Gosh, I don't know. I got a lot going on. As you were listing everything, I'm like, I do all of that. Okay. You know, but no, I mean, yes, I am the Mortgage Boss, Bawse, on all my social media platforms. And I mean, a boss is more somebody that's a female that has overcome challenges and persevered. And that has been my entire life. I don't let things get in my way. I figure out ways around things, how to power through things. I remember when I was a kid, my grandmother had this sign on her wall. It was like, faith either moves mountains or tunnels through them. And I'm going to figure it out. I'm going to figure things out. So that's where that came from.
So you're a loan officer at, and I want to butcher name, Prosperity
Home Mortgage.
Home Mortgage.
Yeah.
And how long you been in the field?
So I have an interesting story. So I've been a loan officer for 8 years.
Okay.
Most of that 8 years, I worked in banks. Okay. And then I left the bank and had to become licensed. So when you're in the bank, you're registered. When you're outside the bank with like mortgage companies, you become licensed. And I was still that entire time in a call center setting. So kind of like, I guess the easiest way, Quicken.
Yep.
You see the commercials, you call the 800 number, somebody picks up the phone and they talk to you about a mortgage. So that was effectively what I did for the last 6.5 years. For the last year and a half, I got out of the call center setting, and now I'm out generating referrals, meeting, greeting, shaking hands, kissing babies.
Yeah.
Type thing.
Edutainment.
There you go.
Giving it all. Okay. What was that transition like from starting in more of the bank corporate setting and then getting out more into like an independent firm where you can kind of control your narrative as a loan officer? You're probably giving more direct knowledge as your independent self than you are working for a bank or a specific firm.
Yeah, absolutely. You're 1,000% right. So when you're with the bank is highly regulated. Well, we're in a highly regulated industry, period. A lot of people think that we're like used car salesmen and we're out to get them. But I wouldn't be able to be on social media if I worked for a Wells Fargo or a Bank of America.
I've never seen like a loan officer of them.
You're not going to. Like, you're not going to because they're very, very protective of their brand. They don't want to open themselves up to litigation of any kind. So I completely understand and respect it. It's great. So on the flip side of that, we have people that don't work for banks and now they out here saying anything on TikTok. And so when I say I do edutainment, I'm very serious about my craft. Like, we gonna kick it and laugh, you know, and say ain't gots and, you know, all of the things. And what you ain't finna do, all of that. But it's gonna be rooted in truth
And knowledge.
and guidelines. So that's kind of how I transitioned into what I'm doing now. So.
Got it. Did that experience help you really understand the business at a core? All those years of experience within the corporate, of just like you've seen a lot of experience. You've seen how the large corporations bring in, you know, people to get a loan, and you've seen the good, the bad, and the ugly. Did they kind of help root you in the knowledge that you got, or do you feel like you learned more on the other side?
Both. So, I mean, I feel like anytime you have any type of journey, personal or professional, everything builds upon, you know, itself. So any past experiences have found some sort of way to benefit me now. In the bank, they're very conservative minded. They're not gonna gamble. They're like, if you a bad risk, you a bad risk. Get on up the block, find somewhere else, get somebody else to do it.
This ain't bring that over here.
Right. Outside of the bank, people take a lot more risk. Well, because I'm rooted in that conservative thinking. When somebody comes to me and they barely qualify, we having a different type of conversation. I'm not rooting for you to fail. You know what I mean? I don't want you to set yourself up for failure. The goal is to retain home ownership, not just to get you into a home.
You'll be in it and out of it quicker than you know.
Exactly.
In the worst position.
Exactly. And so I think my audience appreciates that aspect of the truth rather than, you could get a house with no money. No, you cannot. You cannot.
Absolutely.
And so that has certainly helped a lot. When I was in the bank, education, CE was a big thing. I'm required to do it now, but what I have found is that you have, I don't want to say more professionals inside of the banks, but I got an AMP designation, which is an accredited mortgage professional designation, which it was about 90 classroom hours of training. This is something that I volunteered for, had to pay for. Well, I got a scholarship for it, but it's something above and beyond just regular, you know, here's your 8 hours every year. I wanted to go farther in depth with my knowledge and understand all of the departments. What does everybody do in this process? What happens after the loan is sold on the secondary market? Well, why does that happen? You know, and just understanding just so many facets of it, because
layers to that loan.
It is. It is. And so with me having a far more deep knowledge of a lot of other loan officers, I'm gonna run circles around you all day long when it's time to talk about that thing.
Is that certification like something that they suggest, like the corporate loan officers get, or is something?
It was just something that I saw a lot of people had in the bank. Outside of the bank, I don't see anybody with it. And generally speaking, loan officers don't get it at all. You're gonna see CEOs, VPs, higher level executives are gonna have that designation.
That's where you.
I'm low. I'm low on the totem pole. I'm just a loan officer. That's it. I mean, and I say that kind of tongue in cheek, but really, like, I only need a GED to do my job. It doesn't require much.
But you got an Aggie degree.
I do.
You do.
I do.
Okay, that's good to know. And you put in the extra work, which, like I said, that's a certification that you didn't specifically have to get, but you know that it was gonna make you what I call a SME, a subject matter expert in the field. When thinking about being a loan officer, everybody wants to be a realtor, a broker. Everybody wants to be a broker.
They do.
What made you want to become a loan officer and actually be in that loan specific field in that industry? Because everybody think they can sell a house, including me. Because I got my real estate license. I ain't done a lot with it, but I'm going to keep my license active. But in general, everybody thinks they can sell a house. Why do you think more people are leaning towards more of that and not trying to be a loan officer? Because, like you said, the entry into both of those about the same. I think you got to be like 18, GED. I don't even know if you need a GED for to be a realtor.
Right.
But in general, a lot of people lean on that side. Why don't you think they lean on that loan officer side? And I don't want everybody to jump in your industry either, because you really need to.
I definitely don't want everybody to jump.
We don't need a lot more. Yeah, exactly. But
No.
Why you jump to that?
It's a great career. It's so funny that you did highlight that because it's
Yeah.
so true. Like, especially for people that look like us. Well, my theory, and I say this as someone that in the early 2000s, I did explore that pathway of being a realtor. I took my classes, I think it was 90 hours or something like that. I can't even remember, it was so long ago. But it was something I explored. But it was more because I didn't know anything about this other opportunity of the finance aspect of it. Real estate finance, like if you don't have the money, you don't have a deal.
Zero.
Nothing.
Everything's dropping.
And the other part of, I think, why people tend to go to the realtor aspect is because it's more visual. It's sexier, you know.
Instant gratification.
Everybody sees it. It looks so nice. It looks fun.
Yeah.
Everybody, they prop up their red bottoms and you assume that they have money.
I can get it any house. I can go tour the big ones. I can bring my friends to go see them and all of that.
That it's just, it really, it's more, it's sexy. I don't know what else to say.
Sexier,
yeah, it has a more visual appeal. And so, you know, when you have all of the television shows that are on Netflix, you know, selling whatever it is now,
Tampa,
and
Sunset,
all of that,
everything.
and the HGTVs, it looks like fun, but they don't realize how much work is going on behind the scenes. But as far as, you know, why I would suggest someone get into real estate finance versus being a realtor, and I mean, realtors don't be jumping in my DMs,
Right.
don't attack me. We get paid more than they do.
Okay.
So they get paid more per transaction.
Okay.
We don't get paid the same on a transaction. So a realtor might get 3% of the transaction, whereas a loan officer might get 90 basis points, 100 basis points. So effectively about 1%. Okay. Some brokers get paid, you know, up to 2% on a transaction, but I mean, I have to get into the weeds to kind of explain all of that. But the point is, we have more transactions. So you might have, you know, a realtor that, again, don't jump on me when I say this.
It's the truth.
Most realtors make about $45,000 a year, and that's a full-time thing. So they sell about 4 houses per year, and that's average. Some people are above average. Great, good for them. But for a loan officer, if you were to Google, it would say something like most loan officers make $65,000, $70,000. And again, I'm gonna just let it die right there. That's not it.
But
don't shoot the messenger.
Right, and that's a good way to look at it. And once again, I want to expose people to that. Not saying you're gonna jump into it. It's probably a little bit more rigorous to be a loan officer if I could think about it, because the finance and the back end layering of a loan is a lot. But to think about it, you get a lot more time free on your hands too. I feel like agents are constantly like trying to do the sexy stuff and be out there, and they got to show the houses. They got to do that. You can show someone 50 houses and they might not do anything. Or you could work with someone for a long time and then they may fall out of that contract, or something may come up, or do something stupid like buy a car in the middle of their process or something
or
like
Beyonce
that.
tickets.
Or Beyonce ticket. Don't mess up your house. I was literally just looking at something. This girl was about to, her boyfriend, they were saving up for a house, and she was like, well, take my money out so I can get my Beyonce ticket.
I saw it, yeah.
Hold on, you tweaking. She's tweaking. But if B is at the top of your list, then do you. But I think that house is going to be a little bit more comfortable. But just thinking about that in general, I feel as though loan officers have a little bit more time back on their hands. Maybe you disagree, but I feel as though the process of retaining or bringing in a customer is maybe a little bit harder for an agent or a broker to build that relationship compared to the loan officer. Once they have that person, if they can, you know, take them through the process in a very transparent way, you kind of have your capacity and your time is a little bit wider than what I think an agent is.
No,
am I wrong?
I don't think so. So it's a partnership. Ultimately, the loan officer and the realtor, we have the same goal.
Yeah.
And sometimes it does get to be a little oppositional.
Absolutely.
But, you know, somebody has to be the adult in the room and say, hey, you know, we're on the same side.
Yeah.
the realtor used to be the one that would have all of the clients and say, hey, I'm going to refer you, client, to this loan officer. Well, things are changing and have been changing for quite some time. As I mentioned earlier in my career, I was in more of a call center setting, and so consumers have become more savvy, and they realize now, hey, I probably should get money before I ask somebody to show me a house.
Absolutely.
And so they're going directly to the banks and to the mortgage companies
Skipping the
for the pre-approvals. Yeah, and completely skipping the realtors until they have been pre-approved. And so a lot of what I think you're seeing is like a lot of the marketing and things that go into it. So a lot of the video marketing and things that you're seeing on Instagram and so other social media platforms with realtors is an attempt to absolutely recruit, or not recruit, but get clients to, you know, hey, I want to buy a house, great.
Yeah.
If they're qualified, great. My side of things, it's a little more competitive.
Yeah.
So I may not have certain loan products that that individual needs. They may not qualify based on guidelines that we have. For the most part, our guidelines are going to be based on what Fannie Mae and Freddie Mac says.
Gotcha.
If they go to a credit union or go to a Bank of America or something like that, they may have overlays. So that means they're going to be more restrictive than me. And so it's a little bit more challenging to lock down a customer for me because, well, what's your rate? What's your pricing and that sort of thing? And there are going to be variations between lenders. A realtor is a realtor is a realtor. If you all connect, you like their personality, and they're, you know, effective and efficient at what they do, then there's no problem.
A realtor can sell any house.
Exactly.
A loan officer has specific products that they specifically are able to provide, and maybe that's kind of what I want to talk to now. I saw that you have on all your accounts a number of the products that you specifically work with: FHA, VA, conventional loans. Is Jumbo up there?
Jumbo is definitely. Please let me do your $1 million loan.
Let me do your Jumbo
If
loan.
you need a $1 million loan, I'm your girl.
The mortgage boss. The mortgage boss. Yeah, that Jumbo loan is what we're looking for in 2023. VA, I said VA, FHA, conventional. I've just heard you talk about the USDA loans and whatnot. Could you, in a synopsis, quick synopsis, could you break down to me the conventional loan? Because that's probably the more general one that most people know of. And then from there, let's go FHA.
Cool. So conventional loan is going to be the more popular loan. It's the loan that everybody thinks you have to put down 20%, but you don't.
That 20% can be intimidating.
It should be, because I don't know nobody that got it. But hey, you know, if you do, go off.
Right.
But no, the minimum down payment for a conventional loan, if you're a first-time home buyer, is only 3%. That is the lowest down payment option that's out there. If you are a repeat buyer, meaning I'm selling my house and I'm getting ready to go roll right into another house, 5% down is the minimum down payment.
And it's still
really low. It's less than
doable,
20%.
for sure.
Yeah. So there's a lot of different avenues, but conventional loan is going to be, honestly, well, up into some recent changes, it was for more of an established buyer. So meaning you have good credit, you have some capital. It's just a basic, boring, vanilla loan.
loan.
Period.
Good credit, work experience. You check most of the boxes, all of the boxes.
And you could purchase a more expensive home.
Correct.
Contrast that with FHA. FHA, you need a 3.5% down payment. The credit scores are a little lower, that are accepted can be a little bit lower. You can have some blemished credit, meaning the waiting period, if you've had a foreclosure or a bankruptcy, is going to be a lot shorter. You still need to have some capital.
You do.
No matter what, you're still expected to, you know, cover your own closing costs and all of that. But FHA allows you to have a little bit of a higher debt to income ratio. So there's a little bit more flexibility with FHA versus the basic, boring, conventional loan product.
While we're on that, does student loans impact either one of those?
So a fun fact, I have never, I think maybe one time, had to tell somebody that they couldn't get a house because of student loans.
That's
See,
it's
not
really
the problem. You want to know what the problems are?
What's the problem?
These damn cars.
Buy that car they can't afford.
Move into the car.
Yeah, move.
At this point, that's
Move into the car.
because the car payments are outrageous.
Yeah.
They're not $250, $350, $450. They're not $550.
Yeah.
The average car payment now, I want to say, is $715.
Yeah, I've seen that car payments are getting ridiculous. That's how much mortgages used to cost.
Yes.
But
$715. And what I'm finding is I get all kind of like, yo, listen, my job is funny. Like I enjoy talking to people, but if nobody hears anything that I say, if you are graduating from college, the last thing that you need to be worried about is getting a new car.
Absolutely.
Like the last, like
just get around.
Please. Because it's gonna damage your future for at least the next 5 years. Because I know y'all not financing them for 3 years.
Yeah. And that debt to income ratio is gonna go up.
It's ridiculous. I had a young lady, she just graduated. She had a 96-month loan.
Okay. Yeah.
I was like, I didn't even know they did that.
Right. Yeah.
96 months. I had no idea that was even possible.
That's just messing her up for at least within that month. She probably ain't gonna pay it off earlier than that, to be real.
No.
And yeah, she's not. Most of the time, people aren't just putting extra payments down on their car or whatnot. So
yeah.
Gotcha. So don't be out here just splurging on the car just to get around, because it may impact you getting into a house one day. Because these car payments are getting crazy. FHA, conventional. Let's talk about, maybe for those more specific audience, VA, USDA loans. Who qualifies for those? Okay,
so VA, you have to be a veteran or the spouse of a deceased veteran. And it's some more additional details that go into that. But if you are a veteran and you got a girlfriend, a boyfriend, or whatever, the two of you will not be on the loan together. It has to be a married couple. But most important part is it has to be a veteran. So anybody that's wanted to explore 100% financing, Uncle Sam is waiting for you. USDA is 100% financing as well. However, it comes with a lot of caveats, and it is designed specifically for poor, low to moderate income borrowers in rural areas.
Okay.
And the rural areas are going to be defined by the most recent census data.
Gotcha. We'll consider them rural.
Exactly.
Okay.
So if you think about Charlotte, there are a lot of spaces that were once rural, 5-10 years ago, that now it's a whole, like out in Southwest Charlotte, there's a new outlet mall. That mall wasn't there 10 years ago. Yeah. It was grass and trees. That was a USDA area. It is no longer. Gotcha. That whole area has, $500,000-$600,000 homes now.
Gotcha. Okay, that's a good way to look at it. So you think you're in a rural area, you might want to check that census over for that 5 to 10 year period to see if you're in that area for sure. Got it. And the final one, jumbo loans. Who typically qualifies for those type of loans, or what are they specifically looking for?
So generally speaking, a jumbo loan is going to be anything above the conforming loan amount for a conventional loan. Okay. So
conforming loan amount
is going to be a loan that's going to be backed by Fannie and Freddie. Okay. So right now, I think I should have looked it up because they just changed. I want to say it's $722,000 now. I could be wrong. Don't hold me to that.
People who are trying to get these.
But that's just a regular house. Yeah. That's considered to be a basic, regular, schmegular, not fancy house. Can you imagine that?
Hey, you just said 722, regular schmiggler. No, that don't seem like, I don't want my house to be regular schmiggler.
Yeah, and I could be wrong about that number. I should have looked it up. I forgot, but it's that's the amount. So anything above that. So if you want to get a home that say, I'm just for math, $1 million, and you're putting down 10%, and you need a $900,000 loan, then great. Now you need to get a jumbo loan. The jumbo loan requirements are, again, going to be for borrowers that are going to be borrowing above and beyond whatever the conforming loan amount is for your particular area. And it changes based upon where you are from county to county. You need a higher down payment amount, generally at a just bare minimum. I've seen it at 5%, but usually it's going to be 10 to 15%. It's going to be the minimum down payment. Jumbo loans also usually are going to require that you have reserve money in the bank. So money above and beyond, after you've done your down payment, after you've done your closing costs, do you have 3, 6, 9 months, 12 months of payments somewhere?
Yeah.
And that's going to be like a sliding scale. So think about it. The lower amount of money that you put down up front, the more money we're going to want to see in your bank account after the fact. So it's a sliding scale.
You don't need to be saving up just for your down payment. You need to be saving up for that plus more, because you're going to have to show that in your reserve.
Absolutely.
Gotcha. So are jumbo loans specifically for commercial products too? Or
no, commercial and residential are separate. So for residential, we consider 1 to 4 family units.
Gotcha.
So anything outside of that is going to be commercial.
Okay.
Yeah.
Got it. That's definitely good to know. Taught me something right there. So any other loans that you specifically offer or that you specifically work with, is that your core?
Yeah, I mean, that's going to cover pretty much everybody. I personally like, my clientele of nurses, because nurses, travel nurses especially, before this whole fake degree debacle, they were
fake degree debacle.
Before that, no, I really enjoy working with my nurses because they have steady income. They earn a lot of money.
They do.
In a short amount of time, they can save up their money really easily. They almost always have really, really good credit, because you have good credit because you got enough money to pay all your bills, right?
And they move places and they get stipends to pay for where they want to stay and all of that. I had a nurse stay at one of my properties up in Ohio once. It was on time, baby. It was on time all the time. Everything was just good. It was just, the quality of the person that's going to be there. Most nurses are, top tier people anyway.
Absolutely.
They take care of people. You have travel nurse specialists in your social media handles.
Yes.
Is that of course that's a group you love. Why do you consider yourself a travel nurse specialist in general? Okay,
so being a travel nurse, it has a lot of variable pay. They have, shift differentials, overtimes, and just how you mentioned, they have a lot of the contractual agreements of housing stipends and things like that, which can make banks nervous, very nervous. And so last year,
consistent. Well, it's consistent.
It's consistent as long as you're consistent.
Yeah, as long as you're consistent. If you work for 5 months and then take off 5 because you got paid a lot in those 5, but you just didn't continue to work over that time, it may not show up in your pay stub.
Exactly. And I think one thing that people don't realize is that with lending, you only as good as your last paycheck.
You only as good as your last paycheck.
You only as good as your last paycheck. Because there's no way for us to determine whether or not you're credible. We're not able to basically predict the trajectory of your life. So in mortgage lending, when people ask about credit and things like that, we're looking at the last 24 months of your life in order to predict the next 36 months of your life. And so if you've had, 8 jobs in 2 years, it's like, what you doing?
You don't look the most reliable player.
What's happening? But with travel nurses, we do understand they have these, 12-week assignments or whatever, and they move around. As long as that's consistent, they shouldn't really have any problems. I was able to close 100% of the nurses that I had last year. And I was super excited about it. And so I
100%.
decided, I said, you know what, let me focus on this particular sector. Because again, like I said, why would I spend time on somebody that's not making as much? It may not be as profitable.
Yeah.
It just makes sense.
The goal is to convert to a close.
The goal is to
Always.
convert. Yes, absolutely. My job is not to talk to people all day.
Yeah.
That's a piece of my job, but I don't get paid to talk to people.
Absolutely.
I get paid to close loans.
Yeah. Give them a good process and close on the loan.
Exactly.
I think that's important that you serve everybody, but you do have a niche. So all of my WSSU friends and family that are nurses, because I got a ton.
Okay.
So I think I got your audience for sure. I got a ton of WSSU nurses who I think has the best nursing program in the state of North Carolina. If y'all are interested in getting a home, definitely holler at my friend Joy.
Yeah.
And you are licensed in 13 states.
I am.
So it doesn't just have to be North Carolina
No.
that you support them in. So those travel nurses who are traveling from North Carolina, South Carolina, Georgia, I don't know all your states, but 13 states, most of them are on the southeast mainly.
Well, I mean, I go as far west as Arizona,
Okay.
and as far north as, I think, Maine.
Oh, I don't know too
I'm
many
in
folks
so
moving
many-
there, but hey, you never know.
I think a lot of those people will be moving down here because it's pretty cold this weekend. From what I saw in the news, it's pretty
Yeah.
cold up there this
rough,
weekend.
rough. So definitely, and that's really good to know. You service 13 states. If you are a travel nurse, or if you just anybody with consistent, ready to go look for a home or look to receive a loan and just go through that process, Joy can definitely help you with that. And I think it's important to have that conversation with a loan officer. Like you said, more information is getting out there now where people are learning. I don't even want to go to a realtor if I ain't pre-qualified, which you really shouldn't.
You should not.
You should not.
You should
Realtor,
not.
Don't waste a realtor's
Please
time.
do not.
You should not go to a broker and say, yo, show me these homes. No. You need a pre-qualification letter, and you're going to get that from her. You're going to get that pre-qualification letter from her, and then from there, you can start your home buying journey. And at that point, you'll be good. And I think also the edutainment part that you focus on is going to let them know that even though you qualify for this, don't mean you need to buy at the top of this. Or you don't mean specifically because you got to qualify for $500,000. I tell people all the time, that's what you got to qualify for, but stick within your budget. Because when that mortgage payment has to come out each and every month for a $500,000 house, you need to be ready for it. And the loan officer, it's not your job to tell them everything about like what their future, it is to help them with their future payments, but not everything to expect specifically about their own budget. But I tell people, come in knowing your budget, and the loan officer is going to help give you the reality of what that budget can.
Yeah, because we don't care about your daycare bill.
Yeah.
We don't ask.
Yeah.
It ain't none of our business. You have to factor in things like one big thing I always hear people say is, oh, it's cheaper to own a home than to rent. Maybe on this space, but there are other responsibilities that go along with home ownership that people don't consider.
Absolutely.
Your mortgage payment comes with a tax bill every year. And that tax bill is thousands of dollars.
And it could go up.
Yeah, and it can go, it will go
Yeah.
up. You know, your
mortgage payment
insurance.
may have homeowner association, may have an HOA fee with it. When something breaks, you're gonna have to fix that and call someone, not the maintenance man that services your apartment or your area or whatnot. So you gotta always think about those things. Like, I'm not a handy guy, but when someone would break in my house, I would be like, oh snap, I can't just call, you know, the maintenance man. I have to go get that fixed, and to hire an electrician to fix a roof, to a pipe might break, it costs money.
It does.
But that's not your responsibility to be like, look, you need to have $6,000 aside for this. So just know your budget before you go into these homes, because it can add up if you are faced with a number of those things. So another real cool thing you got going on is the Mortgage Bawse YouTube. You've inspired me to step my game up, my short game. You putting knowledge in quick 45-second in segments. You put knowledge in videos. You telling your journey throughout the way. What made you get into the YouTube game? Because it's intimidating sometimes to get on YouTube and have to, show yourself, tell your story and whatnot. What was that piece that kind of helped give you the passion to jump into YouTube?
So when I was in undergrad, I actually majored in journalism. I was a broadcast news major, so I thought I was going to be on TV.
Yeah.
I did a little bit of radio, all of the things. So it was honestly a natural fit for me. It was inside my wheelhouse. So none of the things that I do is outside of my wheelhouse.
Yeah.
Like it's not a stretch for me. I wanted to get onto my YouTube platform because I'm literally battling all of these TikTok voices that are way bigger than mine that are putting out misinformation.
Correct.
Things that I have been seeing, I mean, it's utterly ridiculous, and I absolutely hate it. And so I figure I do have experience, I have, my designations. Let me try to put out correct information.
Combating the noise.
Yes.
Combating the noise.
Yes. And, it's not the most entertaining. I'm not turning cartwheels or anything like
no
that.
Gimmicks.
No, and I figure, if you really want to purchase a home, you will sit, you will watch, you will listen. If not, then continue down this pathway to nowhere.
Yeah.
Because that's what's going to happen. If you're trying to find all these shortcuts and, all you got to do is, all of that, and gym droppers that people like, you going to end up in the same place that you are right now without a home.
For sure.
And that's a fact. But I love it. I enjoy YouTube very much. I am building it.
Yeah.
We'll see where it ends up. Maybe I'll have 500,000 followers too one day. You never know.
You're going to be there one day. And I see it. You put good content out. Like, that's what I always think is important, is to put good quality content out. Some people are just putting stuff out, dropping this, dropping that. It's not really good content all the time, but you're putting good content out. It's things that you may have to go on Google and search and look through 5 different websites that you put in a quick 2-minute segment. And I love that because, one, we need more faces that look like you to show people that they can be a loan officer and they can teach and educate others about these different things in a very accurate way, combating the noise. And then 2, the creator economy is just huge.
It is.
Like, you have to, I feel like everybody needs a piece of their own media.
Yes.
Like nowadays, like we didn't have the ability to, tell our story in the past, and now we do. No matter if I'm in diversity recruiting, you are a loan officer, you got your background in journalism. So like it makes sense for you to be able to tell your story in this manner, in this way, and YouTube and that creator economy allows us to do that and push a positive narrative. I'm a big hater of the negative stuff that we see within our community that's only about relationships, only about sports, and only about culture. I love this stuff because I do consume it, but that's not our only stories and that's not our only route. So I'm glad to see you, like, not only just being a loan officer and helping people on the ground, become homeowners and really go through their process because they are educated, but now you're creating the entertainment piece to say, I can reach the masses and be able to educate and entertain at the same time. So your stuff is entertaining. Don't say it's not. It's really dope to be able to see that, though. And I try to steal a couple of nuggets of how you do your shorts and whatnot and put into mine also. And because it's just important to be able to have our own media and be able to control our own narrative. And I think you do an awesome job with that.
And it's not a lot of black loan officers.
It's not.
That's the other thing. I will say it's not. It's not a lot of black loan officers. And having that platform with the, accolades that I do have, I feel like, please come to me.
Yeah.
Ask questions. I'm very open. And I got a master's degree in teaching as well.
Yeah. Okay.
So, I mean, I know a little something.
Educated.
I know, I do, a little razzle dazzle.
Yeah. You know how to make the audience, grab into it. So that's dope. Besides that, where do you see it going? Like, is there a specific area you want to take it in 2023 with your YouTube? Is there anything you want to, like, I can't wait till I start giving this, or like it's on the trajectory for your YouTube?
I'm building right now. I just want to get monetized. I need these 4,000 watch hours ain't no joke, okay?
4,000 ain't no joke.
These 4,000 is hard.
We're gonna get there though. We're gonna get there. Hopefully this will help us get there. Right. So we just gonna keep grinding.
That's where I am right now, just the pathway to monetization. Hopefully my desired goal is to be able to be one of the thought leaders and the voices, and be invited to conferences and things like that, to speak on behalf of people that look like me. A big narrative that I'm constantly combating is that black people are poor. Black people are not poor. Black people are not poor, and I don't think that is spoken about nearly enough. So hopefully, like I said, I'll be able to build my...
The person that sees the application, the person that knows how people are coming into the building and what they're able to qualify for, what they are. So if a loan officer is telling you that, I promise you, there are a lot of other people who can talk about if a person is not in the right socioeconomic status, you see what people are coming in with. So yes, that's a good narrative to combat, that we are not poor. We have a lot of wealth in a number of different ways. It's just where we decide to put it. Cool. On top of that, you are the host of the Uninvited House Guest.
Co-host.
Yes. His name?
Tony Stanford.
Is your co-host, and you all have the Uninvited House Guest podcast. Well, I love the name. Talk to me about that and the different topics you touch on.
So the Uninvited House Guest podcast is myself, a loan officer, and my co-host is a realtor, Tony Stanford. He's a local realtor here in Charlotte. And we just talk about a variety of issues as it pertains to housing, the housing market, any developing news as it pertains to any changes that are going on, and just really giving foundational knowledge of how to purchase a home, what you need to know, how you need to move. Just basic, and it's great because it gets both perspectives.
For sure.
9 times out of 10, the realtor and the loan officer are going to see things the same way, but we each have different vantage points of those same points, those same things. And so being able to combine that, I think, is even more powerful than just having a singular voice.
For like me, I listened to your most recent podcast, and it was about buying a home with your spouse, or should you buy it collectively, or should y'all be applying together? And it's like, I know, but then at the same time, there's a little bit of gray area. Like, should you be applying alone? Should you be applying together? When you're purchasing something, like, what are those, like, just details? And even in the, 19 minutes, 20 minutes of that podcast, you break down those details and go through just scenarios that you faced or seen. And I think that's extremely important, where you can hear it from, like I said, the horse's mouth, that you can hear that, these direct facts that you can directly align or parallel to your life. And you got a number of episodes about different scenarios to help people navigate that in a very natural setting. And it was good to see how y'all balanced off each other. He gave a perspective from a realtor, you gave a perspective from a loan officer. And there is a marriage with those two. So
it is.
Always just don't think because you know a realtor, you get in the house. You need to know a good loan officer too. You need to go through the right program. Any foresight for that podcast in the future? You gonna keep that rolling?
We're definitely gonna keep it rolling. It's growing too. So that's just more of it's not a visual. It's just audio. So you'll have it like on what is it? Apple, Spotify. That's where you'll find that.
Okay.
So yeah.
Got it.
But yeah, we're gonna have a lot of good information coming out in this coming year. One thing that I think that we should be on the lookout for is that the refinance market is coming back. So if you're watching this and you've purchased your home and you were at 6-7% interest rates will be coming down. The biggest piece of advice that I could provide, keep your credit up, keep your expenses low, because whenever you refinance, you have to qualify all the way over again. And a lot of people don't realize that. you might not be able to qualify. Like, I know the big thing last year was like marry the house and date the rate. I was like, I wish y'all would shut up telling people that they can
Marry
just
the house and date the rate.
Yeah, stop telling people that you can just switch in and out of interest rates because you can't.
You got to pre-qualify.
You have to qualify again. And so, especially when you're in that first year of home ownership, that's like the most expensive year because you got to get your refrigerator. Y'all know houses don't come with refrigerators.
Zero.
They don't. They don't come with refrigerators.
Wash the dryer either. And shoot, if you get the right one, they ain't gonna have to paint. If it ain't a new building, it might not have the paint you want. That's gonna cost a lot. Might need some new siding. It's a lot of stuff that comes along.
And it all costs money. That first year getting furniture and all of the things. Oh my gosh.
And eat some carrots and some grass because just know it costs a lot of money compared to when you move into an apartment. You get your furniture in, you just ready to go. When you got a house, you got to get that grass cut and all of that stuff. Cause that's another. You do not want to be living beside somebody and they'll upkeep their stuff and all the rest of the.
I know, like my neighbors might be talking about me right now. Okay, I ain't gonna lie to you. My grass, it didn't quite grass the way I wanted it to. It didn't really. The fertilizer didn't really fertilize. It didn't.
Like it needed to.
It ain't quite green. It's like off green. It's more like this green. It's not a vibrant.
Well, we got seasons in North Carolina, so we're gonna attribute it to that, But,
and the water bill that comes along with the sprinkler system. You get an irrigation system. That water bill like $200 a month.
All of that.
It's wild. But the point is, if you put a lot of these things on credit, your debt to income ratio is gonna be off. If you're someone that got into the house and then decided you want to be a truck driver and now you're self-employed, go on, get to the back of the line, sis. Go on, hang that up, bro. Because you got 2 years to be self-employed before we'll be able to revisit that. So,
gotcha. That's
just some food for thought.
Food for thought, because a lot of people make moves and they got a goal or a vision for something, but they haven't planned out with their financial backing and what needs to be shown on paper to even get in the door. So I think this has been very insightful. I think you've given us a lot of gems and tips. We could probably go on for 2 to 3 more hours, definitely in this industry when it comes to qualifying for a loan, the process, how it can directly impact the number of areas of qualification, and just knowing to come prepared, but also just doing your research in advance. So I would definitely recommend to find Joy on any of her social media platforms. The Mortgage Bawse, B-A-W-S-E.
Yes.
B-A-W-S-E, you thought I was going to spell it wrong. The Mortgage Bawse, B-A-W-S-E, YouTube, Instagram. Where else you at? Those 2 main ones?
YouTube and Instagram.
Instagram. You can definitely find her. She is a responsive person. I hit her about this podcast. She's back there with me, and we're here today. So I do appreciate you for being on the Kyle Brown podcast. And once again, my entrepreneurs friends, you know who to find for sure. But thank you again, Joy, for being on, and we can do it again.
I appreciate you. Thank you so much.
Absolutely. Thank you.